there has already been a tremendous amount of churn and rotation and even turmoil under the surface, maybe more reflective of all of these uncertainties that we're still dealing with than what you would pick up if you just looked at the index level. Jackson Hole is important. Obviously, the September FOMC meeting, we're thinking 25, not 50, barring a more significant surprise in some combination of the PCE that's coming up and the jobs report. But at this point, we're penciling in 25 as the start point.
Lizanne, Tom's going to be so sorry that he missed you, I just got to say. If we see, though,
Ditto.
cuts not in a recession, does that change the leadership profile? Like no financials, stay with tech. Does it change how you think about it?
Yeah, what does tend to happen is if you look at past cycles and you see the Fed operating more slowly, ostensibly because they're not combating a recession or a financial crisis or some combination thereof, not only do you see milder maximum drawdowns within, say, the 6 months or up to a year following the initial cut, you tend to see more of a cyclical bias in terms of what does well at the factor level, at the sector level. In contrast, the fast cutting cycles, where ostensibly they are combating a recession and or financial crisis, like was the case when the Fed started cutting in '06. We all know what was still ahead of us. That was those were backdrops where there were greater maximum drawdowns and more defensiveness in terms of factor and sector-based leadership. So I actually say to people who are looking for or hoping for an aggressive Fed, be careful what you wish for. It's the why behind the Fed starts a cutting cycle and the level of aggressiveness that defines how markets behave.